and welcome to Startup Street. I'm Arundhati Ramnan, and with me are Shruti Mishra and Ritu Singh. These are the top headlines from the startup space. Uber leads a $20 million round into Everest Fleet, a fleet management company that boasts over 10,000 vehicles running on rideshare platforms Uber and Ola throughout India. The company will use the funds to accelerate its transition to electric vehicles with a goal of having 10,000 EVs in its fleet by 2026.
A group of lenders informed Byju's that they are open to negotiations with the company to resolve litigation and other disputes, according to Bloomberg News. However, they will not engage in the firm's proposal for one-on-one meetings. The lenders want Byju's to send a draft amendment proposal to the group.
Mobility platform Intercity's revenue has zoomed 6x for FY22 to 23, crossing the 290 crore rupee mark as against the pre-COVID levels. In the ongoing Q1 FY24, it has already surpassed 100 crore rupees in revenue and claims to be on track to profitability this fiscal.
A U.S. judge granted the Federal Trade Commission's request to temporarily block Microsoft's acquisition of Activision Blizzard and set a hearing next week. Without a court order, Microsoft could have closed on the $69 billion deal as early as Friday. An evidential hearing in the administrative proceeding is set to begin August 2.
Google is launching 2 new artificial intelligence-powered features for advertisers that will automatically find the best ad placements for brands across the tech company's services.
Well, those are the headlines that we're tracking for you today on Startup Street. Now on to our top story today. RBI's recently announced guidelines on first loss default guarantee, or FLDG, in digital lending have brought in some much-needed regulatory sanctity and removed ambiguity around its use by banks, NBFCs, and more importantly, non-NBFC fintechs. However, RBI has tightened norms on the extent and form of the FLDG cover and recognition of non-performing assets in partnership models. These include limiting FLDG to 5% of the portfolio and not allowing corporate guarantees as a form of FLDG. So joining us now to discuss this and its implications are Ashish Goel, who's the director at Fintech Association for Consumer Protection, or FACE, and the co-founder of Five. Also joining me is Anand Kumar Bajaj, the founder CEO of Pay Nearby. Ashish and Anand, both of you, thank you very much for your time here on CNBC-TV18. And Ashish, I'm going to start with you because, you know, this brings in some much-needed legitimacy, even if with some stringent rules. What's been the general feedback from fintechs, areas of worry and areas of relief?
I think it's a very, very good move by RBI, purely from a perspective that it brought a much needed clarity to the entire ecosystem. It is the best thing which has happened to fintech for a long time. And in my view, this brings clarity and much more needed support relief for the fintechs. I think the biggest beneficiary here would be the borrowers which borrows from the fintech, because it will bring more capital to the fintech industry as a whole, as well as it will reduce the cost of funding for the borrowers who are the ultimate consumers. Overall, it is a very, very great step by RBI.
Sure. Anand, if I were to come to you and get into more specifics, to what extent had this lack of clarity on FLDG affected lending overall, and now will there be a significant boost? Or, are there any terms in the latest guidelines that fintechs like you are worried about?
Sorry, the whole machinery was almost on a standby and awaiting the regulatory clearances. And now that it is clear and specifically to detail, I think the boost will happen from here on.
All right. And Anand, are there any areas of concerns, for lenders like you, for instance, the cap or the fact that only corporate, just corporate guarantees are not enough, there'll have to be cash, other forms that will have to be considered, by banks when they're looking at FLDGs. Any specific concerns?
No concerns, absolutely. And this is the best model. This is what we were following earlier also. And similar ratios of FLDGs were with our partner banks that we were following. And glad that the regulator has seen this particular ratio as a sane ratio. Otherwise, there was no end to either waive it off to 0 or to make it 100%. And with this 5% FLDG, I think it's more about the skin in the game and not really pulling the muscle into the game. of the partner entities who work with the regulated entities.
Skin in the game.
And the clear outline is that the regulated entities would be in a better position to do credit decisioning, since they have access to data, access to account aggregator, access to credit bureau, and hence this responsibility resides with the regulated entities itself. Ritu.
Well, more skin in the game, Anand, is definitely welcome. But Ashish, I'm not so sure that that 5% cap is something that won't affect players because, from our understanding, fintechs were offering banks default covers of as much as 100% in certain segments, especially when we talk about unsecured lending. So, according to you, what are the segments that will be most affected and what will be the least affected because of this 5% cap? And will we see some of the co-lending markets see a drop in the near term in volumes because of these new rules?
I don't think there will be any drop in the volumes. Rather, the volume should increase. Like Anand said, 5% is a good enough number in my view. And most of the players who are doing the large scale businesses, 5% of the portfolio is a very decent amount of cover RBI is given. There might be few players who run large risk portfolios. They might need to change their business model. But what in my mind RBI has done here is that by putting a 5%, he brought the skin in the game for the fintech, as well as it has also brought in a discipline for the regulated entities to say that you cannot underwrite the very, very high risky businesses because beyond 5%, the risk belongs to the regulated entities. So in a way, RBI has addressed the consumer protection because they have seen in the past, there were cases where there were very, very high interest rates and high defaults has been seen in the portfolios. By putting this 5% cap, we can always argue whether it is 5 or 6 or 7.5. But in my mind, 5% is a good enough number to ensure that you build a very healthy portfolios, give money to the right set of consumers over a long period of time, and build a balance sheets both for fintechs as well as for the regulated entities in a right way.
Okay, so you're saying no change is needed in that 5% cover, which is quite contrary to what we've been hearing from other fintechs. Some of them even opine that perhaps 50% is a number RBI could look at. 100% of course would be too extreme. But Anand, coming back to you, now when we're talking about these changes, the cap on FLDG cover, NPA recognition, also the fact that, banks and NBFCs cannot use the invoked FLDG to reduce their provisions. Is this, do you think, to an extent going to dissuade banks and NBFCs from getting into such partnerships?
So the rightful models that were working were around this boundaries only. So I don't think the genuine models would have any impact. And as Ashish rightly highlighted, that the clear impact of a higher FLDG is on the higher interest rate, and which is not consumer friendly. There are models where the FLDG of 20-30% was also available with a 50% interest rate to the consumer. So ultimately, this higher FLDG gets accommodated in the form of interest rate for the consumers. I don't think that is fair. And again, I would reiterate that a market partner for a regulated entity can do only so much of bringing in a particular use case or a user who needs a loan rather than underwriting the entire credit or taking a decision on that. It is best left to the entities which are licensed to do that and poised to do it in the proper manner.
All right. We're running out of time. Ashish, a quick final question to you. The rules also say that all non-cash forms of FLDG other than bank guarantees have been disallowed. What does this mean for fintechs? Will they need more fundraising to meet these requirements, enter into partnerships?
I think most of the previous arrangements also had a component of cash or a bank guarantee or a fixed deposit. So I don't think there is any change in the environment from that perspective. It actually brings the clarity to the ecosystem, and also to think of a way if there is a person who is not able to put some kind of an FLDG, there are always different ways of building the businesses which they can do it. But this is a right way to bring a very, very cohesive ecosystem where there is a player who has a large amount of capital, which in this case is the banks and the large financial institutions. And there are fintech players who are building innovation to the ecosystem by reaching out to the next layer of consumers, by reaching out to the consumers which today are underserved or unserved. I think it's a win-win situation. I expect three things to happen here. The first is the cost of borrowing should go down for the end consumer. Second is that it will bring larger liquidity to the system, because now more banks and the larger capital provider would be more than willing to partner with the NBFC fintechs, and the fintech ecosystem shall actually attract more investments from the investors also, as well as more innovation shall happen. So it is overall, I think it's a very, very smart move by RBI to bring more inclusion, more customer protection, and ensuring that the delivery of credit is at reasonable price.
Ashish and Anand, we're completely out of time, but thank you very much for sharing your thoughts on this very important matter, and hopefully it will boost digital lending, like you say, going forward. On that note, Shruti, it's back to you in the Mumbai studio.
All right, Ritu. Interesting conversation there. Fintech seem happy. FLDG has surely brought the much-needed legitimacy, but with some stringent rules. Moving on, Pixel, India's first company to launch private commercial satellites in space, recently raised $36 million in its Series B funding round, with participation from new investor Google, along with existing investors Radical Ventures, Lightspeed, Bloom Ventures, GrowX, Sparta and Athira. To elaborate on Pixel's journey into the space, joining me now is its co-founder and CEO, Awais Ahmad. Awais, welcome back to Startup Street. And before we talk about the fundraise and the new investor, Google, Pixel recently bagged a 5-year contract for supplying technical hyperspectral imagery to United States National Reconnaissance Organization, that is NRO. Talk to us about this partnership. What does this mean for you?
Yeah, thanks for having me, Shruti. It's great to be here. I think just taking a step back, right, as you know, we build a constellation of hyperspectral imaging satellites that can look at what's happening around the globe at a much deeper level of detail than other kinds of satellite imagery that is existing in space today. So I think this contract with the NRO is a good step forward, because it's one of our larger government contracts, the first government contract that we announced as well. Previously, we have been very much focused on the commercial side of things, with clients in agriculture, with clients in mining, with clients in oil and gas space. But the government is a large buyer of satellite data around the globe for use cases as varied as knowing, how much of a crop is going to grow in that particular year in that country, to knowing what the inventory of the forests are for that year and how they are changing year on year. And so I think it's a good step for us in terms of actually starting to provide data to different governments. We have been closely working with the Indian government as well, but given that the US government is the single largest buyer of satellite data globally, and the US is the single largest market, as you've always said, we've been wanting to build from India for the world, and that's a big boost of validation for us. And along with the fact that having customers like these has really helped show that there is a market to an industry like space where our data can actually sell, where there are users and customers to our data, which also helped with this new fundraise that we were able to get. So I think it's a great step forward.
All right, and we'll get to the fundraise quickly. But 2022 was a landmark year for Pixel. You launched 3 Pathfinder missions into orbit. Your customer base has grown 5 times. So what projects are you currently working on, and what's in the pipeline?
Yeah, so I think the biggest thing that we have been heads down focused on is the fact that the 3 demonstration satellites in space, working right now, taking images of the Earth. We've been quite busy taking images of various different kinds of terrain. We've been busy taking images of forests, to agricultural land, to mining pits, to volcanoes and everything else, to be able to see what different things we can actually see in different kinds of the world, and sharing that with our customers so that they get more comfortable with our data set, so that they can start ingesting that into their pipelines and start getting used to how to work with our data. So I think that's been the biggest focus. But apart from that, the things that Pixel is most focused on right now is our constellation of 6 Firefly satellites. These will be our first fully commercial satellite constellation that will start going up early next year, for which we have launches with SpaceX. So I think, that's what we've been focused on, making sure that from demo satellites to now moving on to fully fledged commercial satellites that will have a much longer lifetime in space, that will have much higher capacity and resolution in space. So that's the main.
Okay, so plans for 6 more satellites in 2024, and I believe 18 satellites, you plan to launch them in 2025. Awais, now let's talk about the $36 million fundraise. How do you plan to allocate the funds? And what does Google's backing mean to you? What is the kind of impact you hope to create with Google?
Yeah, Google is, as we all know, one of the most well-known names in the world, and having someone like that internationally come into a space company is a big validation, not only for us, but for the entire space ecosystem that the country is trying to put up, right? There have been great strides just in the last 2 to 3 years from the country in terms of doing that. So I think that's even greater validation for us as well as for the ecosystem that someone like Google is willing to take a risky bet in a situation like this. And secondly, there's, it's a strategic investment in the sense that there's a lot of things we can do together going forward. We've all played around with Google Earth at different points in time, and our data can be ingested there as well as to various different customers that Google already works with. But coming to the $36 million itself, the great thing about this is it fully funds us for the first phase of the satellites that we want to send up. So we don't have to be dependent on external funding anymore. We can keep our heads down, focus on actually building satellites, sending them up there and starting to generate revenue from that. And the money will be spent in 3 major buckets. The first one towards launching the satellites and building the satellite manufacturing facility itself. The second will be towards hiring more people so that we can actually keep up the ambitious timelines that we have, and that requires people to work in parallel streams. And thirdly, towards our AI-powered geospatial analysis platform called Aurora, because it's not just enough to dump data on our customers. It's important for them to actually have tools to analyze that as well.
All right, Avais, we've completely run out of time, but many thanks, and we wish you the very best with all your plans. Thank you so much for joining us on Startup Street.
Thank you for having me. Thank you.
So that was Pixel's growth plans going forward. On that note, it is time for us to head into a short break. But coming up, urban company Beautician Partners has staged a protest raising concerns over the permanent blocking of their IDs. A special report when we return. Stay tuned.
नई कार तुमने कार इंश्योरेंस खरीदा होगा आगो ऐप से नहीं
आपको नहीं तो
कोई बात नहीं मूर्ति गलतियां होती रहती हैं कोई जरूरत नहीं है चेक करने नहीं मूर्ति कोई फायदा नहीं कोई जरूरत नहीं
नई कार खरीदने से पहले आको चेक करें और 36,000 तक बचाएं।
The MG Cluster Blackstone. Drive unstoppable.
Great Place to Work India recognizes committed leadership, resilience and for all mindset as the true mark of leaders who drive transformation for growth and impact. Join us as we honor such nation builders and for the first time ever recognize India's most trusted leaders. Great Place to Work India presents India's best employers among nation builders and India's most trusted leaders.
ना तो इन्वेस्टमेंट होती है प्लान, ना मैं स्टॉक मार्केट का फैन। क्या तुझे पता है कैसे करते हैं ट्रेड?
तो इन्वेस्ट इन 5 पैसा स्टॉक SIP that starts at just ₹50. डेली इन्वेस्टमेंट का नो मोर स्वेट, जस्ट सेट एंड फॉरगेट।
करो इन्वेस्टमेंट सिस्टमैटिक जो है रेगुलर एंड ऑटोमेटिक। 5 पैसा स्टॉक SIP, ऐसे करते हैं ट्रेड।
Investment in securities market are subject to market risk. Read all related documents carefully before investing.
What if you could get your goods to the right place at the right time all the time? With IBM Consulting, AI-powered software can help automate your supply chain so products can be ordered, produced, and delivered more efficiently. What will you create? IBM. Let's create.
Keeping up with the pace of life is not easy. To find the perfect balance, we need to savor the pause. See? It never ends.
Whenever I had ice cream or cold water, I would experience a sharp shooting sensation. So I just kept ignoring it. Even my hot chai was giving me the same amount of discomfort. My dentist recommended Sensodyne. So now I can be completely carefree and sip my hot cup of tea. It really works.
Welcome back. You're still with us on Startup Street. Now to the big story tonight. A group of Beautician Partners has staged a protest against Urban Company, raising concerns over the purported permanent blocking of their IDs by the company. Aishwarya Anand speaks to Urban Company's partners. Take a look.
चक्कर आ रहे हैं, बेहोश हो रहे हैं, बार-बार हम लोग को अनब्लॉक नहीं कर रहे हैं। धूप में खड़े, देखिए धूप कितनी तेज हो रही है। बस ब्लॉकिंग का सिस्टम हटाएं हमारा।
a month after the gig workers went up in arms against Blinkit, today the spotlight is on Urban Company after its partners have protested against some new policies. And standing outside Urban Company's office in Udyog Vihar, where the beautician partners have gathered to raise their voice against their IDs being blocked on the platform. According to the partners, their IDs have been blocked due to the cancellations that's taking place on the platform. Secondly, due to the leaves that they are taking if they want to go on a leave for 2 to 3 days, and also because of the fall in the response rating.
मुझे बताइए आप कब से ब्लॉक्ड हो, कब से आपका आईडी ब्लॉक हुआ और आपकी आईडी क्यों ब्लॉक हुई है?
मैम मेरे 5-6 दिन से मैं ब्लॉक्ड हूँ। हमने 8 साल इतनी मेहनत करी, अपने पर्सनल कस्टमर नहीं बनाए और काम कर करके हमने जो आज इस लेवल पे कंपनी को पहुँचाया, उसके बाद आप ये पुराने लोगों को हटा रहे हैं और नए लोगों को रख रहे हैं सिर्फ इसलिए नई लड़कियां ज्वाइन करेंगी, वो इनको 50,000 रुपये देंगी और हम लोगों ने दे दिए। पर 5 साल बाद आज अगर कंपनी आके कह रही है एक पॉलिसी चेंज पे हम आपको 1 महीने का भी नोटिस नहीं देंगे और ब्लॉक कर देंगे, क्योंकि मेरे पास सिर्फ लास्ट मंथ इनका एक कॉल आया था कि आपके साथ हम ऐसा कर रहे हैं, तो आप उस 5 साल के एम्प्लॉय को चेंज होने के लिए थोड़ा सा टाइम तो दोगे।
पॉलिसी में क्या चेंजेस? आप मुझे पॉलिसी
चेंजेस ये है मैम कि अगर लेट सपोज मैं आज दिल्ली में हूँ, अगर मुझे गुड़गांव की बुकिंग करी, मैं ये एग्जांपल दे रही हूँ डिस्टेंस के अकॉर्डिंग, और हमें ये टाइम दे रहे हैं आधे घंटे का, मान लो हमें ट्रैवल टाइम 1 घंटा लगता है और कस्टमर कहता है जी मेरा टाइम तो इतने का था, तुम इतने बजे क्यों आ रहे हो, वो कैंसिल करता है, वो भी हमारे ऊपर लगती है। तो अगर 1 महीने में वो 5 कैंसिलेशन आती है तो वो हम परमानेंट ब्लॉक हो जाते हैं।
और रेटिंग का मुझे बताएंगे, रेटिंग का प्रॉब्लम?
रेटिंग मैम पहले हमारा जब हमने ज्वाइन किया था 4.5 था, अब इन्होंने 4.7 और 7.4 कर दिया है।
A day after Urban Company partners submitted a memorandum citing their demands, the company has called them for a meeting today to decide on whether they should be unblocking their IDs or not. However, from what we know and what the partners have told us, the company has taken another 2 to 3 days' time to unblock their ID cards, and their fate still remains in the limbo. When CNBC-TV18 reached out to Urban Company to get a statement, they refused to comment on the issue.
कल भी इन्होंने शाम तक हमें ऐसे ही बिठा के रखा 7-8 बजे तक। एंड में इन्होंने ये बोला सीनियर सारे बेंगलोर से फ्लाइट लेके रात की 9 बजे की फ्लाइट है, कल आपका सोल्यूशन पक्का होगा।
एक लड़की को बुला रहे हैं और एक लड़की को बुला के अंदर बैठा रहे हैं और बस कह रहे हैं कि आपका 2-3 दिन में चांसेस हो सकता है, 2-3 दिन के बाद देखेंगे, वैसे तो ना की उम्मीद। सबको 2 दिन कर करके बेवकूफ बना के बाहर भेज रहे हैं।
According to the Urban Company partners, this has been going on for a year. They claim that over 1,000 gig workers have been blocked out of the platform for not meeting the new policy requirements. Additionally, the All India Gig Workers Union has submitted a memorandum with the demands to the company, stating that similar issues are being faced by electricians, plumbers and carpenters, among others employed by Urban Company.
In the beginning, the workers were not able to put a finger on what was really happening. They would just see, for a couple of days not getting any jobs, then later on getting a message that they've been permanently blocked from the platform. Individually, they would reach out to their category managers who would say, this is an automated system, we cannot do anything, we cannot intervene, and this has happened because of XYZ reasons. What the company is saying is that you have to give a high response rate, you cannot cancel jobs, you have to have really, really great customer ratings, you have to consistently every day say that we're going to do a minimum of 4 to 5 jobs. So, it kind of does away with the very claim of gig work, which is that, it affords workers the flexibility. Conditions that are creating these permanent blockings of IDs should change themselves.
This isn't the first time that Urban Company is in the midst of a disagreement with the workers on its platform on its policies. In fact, a larger protest played out in late 2021 when female workers raised issues around safety and working conditions. At the time, the company launched a program to improve partner ratings and positively impact their livelihoods. With camera person Rajinder Singh, Aishwarya Anand for CNBC-TV18.
And just in, Urban Company, in a statement to CNBC-TV18, said, and I quote, "We had recently asked a few partners who are not meeting the marketplace standards despite multiple prior notices and retrainings to part ways with the marketplace. We continue to maintain an open door policy and encourage dialogue with our partners. We remain committed to building a safe, high-quality home services platform." End of quote.
So that's the latest on the protest against Urban Company. Moving on, industrial machinery maintenance solution startup Infinite Uptime raised $18.85 million in a B3 funding round late last month. This funding round was led by Tiger Global and saw participation from existing investors. Pune-based startup plans to use the fresh funds to strengthen its global market share and enhance the service of quality across industry segments. Joining us now to discuss this further is Ronak Binj, the co-founder and CEO of Infinite Uptime. Ronak, thank you so much for joining us on Startup Street today. You essentially provide predictive maintenance solutions for industrial machinery. How are you using AI to improve your clients' overall efficiencies? Give us some use cases.
Sure. So we are using data from equipment, which are used in typically process industries like steel industries, cement industries, oil and gas industries. We are able to predict faults in these equipment well in advance using this data and using our AI algorithms and analytics. So this helps pinpoint specific faults in equipment right up to the last detail in terms of what action needs to be taken and how it needs to be taken. So this really helps in identifying this in advance, save potential catastrophic failures and breakdowns, and prevent disruption to production lines.
Right. So essentially, you've raised a little over $18 million in an extended Series B round. So what does the Tiger Global backing mean for you, and how are you planning to use the funds, research, product development on top of the agenda?
Yes, so most of the funding is going to be focused on improving our R&D, adding more, improving our entire service quality, ensuring our AI algorithms are much better, performing much better. We are able to identify many more faults across more applications and save more money for our customers. And we are also looking to expand the company's growth in the US market. So those are the key areas of focus for us using this new round of funding. And of course, Tiger Global brings in a lot of credibility to the organization. It's a great organization and great fund to work with, and it gives us that global standing that we wanted.
Right, so it gives you that global standing that you needed. Let's talk numbers then. What are your revenues currently at? You've obviously clocked some losses. What are the targets you've set for yourself going forward? And how do you plan to cut these losses? What's the road to profitability looking like?
So goal is to double our revenues year on year for the next 4 years, and get to that $100 million ARR mark. We just turned profitable in April this year on an P&L basis, and we want to continue to uphold that high standard going forward.
All right. So that's the target you've set for yourself. You're obviously present in international markets, and you said US is somewhere that you also want to grow and focus on that market. So what's your largest market currently? What's the revenue mix? Any new markets on the radar?
So currently our biggest market, about 50%, is the India market itself, where we actually started our go-to-market. And then we built up the Middle East market over the last couple of years. And finally, more recently, last year, we started the Southeast Asia market. This year, we are focusing on the US market, and we've started to build up our team in the US to support customers over there locally. And we believe this is going to be a large market for us in the future.
All right. And if you could quickly talk to us about some of the products that you have on offer. What are the clients you're catering to? Any new products or categories you're looking to foray into?
So right now, we started as a predictive maintenance company, focused mostly on rotating assets using vibration monitoring technology to predict faults in this equipment. We are going to add more product capabilities and service capabilities to our offerings that adds more value, saves downtime, and predicts faults in more types of equipment, more types of applications, adding the angle of energy monitoring, which will help in improving energy efficiency and sustainability for these kind of organizations. And constantly listening to customers, telling us their new problem statements, their new use cases where they're having failures, and we want to be a full-fledged, IoT company for them, solving all their various problems across their processes.
All right, Ronak. Thank you so much for joining us on the show. We're completely out of time, but we wish you all the best going forward.
Well, with that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Go power.